Forget stocks. The name of the game is the value of money. Hello traders everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub with your midday market update for Monday the 13th of May. Okay, we've got some stocks to cover. We've also got the currencies to cover. And if you're a member of MarketClub, you may be seeing this comes up, this right here, just to show you that your subscription is coming to an end. Give us a call. We have some nice gifts for you, renewal bonuses. So give us a call if you see this message from us. But let's get started right away on our portfolio. So we're going to, it's Monday the 13th of May. Let's start with gold. All you can see is red triangles here. Not a good sign. Now on to the right of that, you're going to see a new symbol. This is a new icon we put up. It's charts. We changed the old icons. We think these are much more appropriate, and I think they're really nice. So click on the chart. Okay, we're looking at gold, and as you can see, gold has really had a pronounced down move for some time now. You can see our trade triangles here, really short from 1672, and we've had a pretty big rally. So here's the move. So we'd round it off like this. But the one thing you may want to look at is a tool called a slow stochastic. It's part of your tool set in MarketClub. And the idea behind this is when the market crosses over like it just did here, you want to cover short positions, and you can see it's very close to the lows, and really you would have missed this big rally, which quite frankly was a big rally. We actually, in the trade triangles, we picked it up right here. So we weren't too far off the lows, but nonetheless the market moved up. It's beginning to roll down. You see the stochastics are down here. All of our trade triangles are negative. So we expect this gold market to come down at least to test the 1340 level in the near term and possibly go even lower after that. Hedge funds put a big bet on $20 billion to be short the gold market, so we'll see how that plays out. Let's go to our next market. Next market is the euro dollar, and the euro dollar basically is sort of going lower in my opinion. You've got a situation where if we just do a simple line chart, and we talked about this last week, you've got a number of points here. This is definitely resistance, and that's what we call a pivot point right there. And the fact that we closed below that level, I think we're set up to test the 128 to 127.50 level. I think that people want to own dollars right now. So let's moving along to the Dow Jones Industrials, and let's put a candlestick chart plus 100, strong trends. A little bit of a negative feel coming into this market based on the stochastics, slow stochastics. And I think you want to be a little bit cautious here. I think that the market's had a good run, and we've been long since 13,661. It's 15,000, so 1,400 points. So we're very happy with that. And let's go to our next market. That's going to be the CME, the S&P 500 cash. New highs. It's hard to stop a trend once it gets underway, and of course we are underway. Very strong markets. You can see the weekly kicked in here. A little bit of a concern with the stochastic. And as we scope this down further, you can see even the Williams percent R is really very overbought. But not to say it can't go higher. It is going higher. Everyone's been trying to fight this tape. You can see where our last buy came in right here at 15.97. And nice profits there. We had a nice run from this level. So again, it's all about trying to catch the run. Moving along to the NASDAQ, new highs on the NASDAQ. You can see we're long from 3,306. Again, a strong trend. The market right here is a little bit mixed on the MACD, but nonetheless, the trend is your friend, and the trend is plus 100, meaning strong insiders are owning this indices. So moving along to the US dollar versus the Japanese yen. Again, we've been very lucky. Let's just scope this out a little bit further because it'll give you a better feel for this market. So there's our weekly at 78. We put the monthlies in here. You can see the monthly kicked in right here at 80. We're currently trading at 101.88. That is a huge move in the Forex markets. You can see our last signal came right here at 97.74. With leverage, these are huge profits. Currencies are being debased by their countries to make them more competitive. That's what Japan's doing, and it's going to continue to do. But I think right around these levels, 102, 103, I think there'll be a better place to be a buyer of the dollars against the yen. So I think I'd exercise a little bit of caution here, but the trend is your friend. If you're long, stay long, but keep your stops very tight. Moving along to the Australian dollar. The Australian dollar, if you didn't see our Australian dollar video, you should watch it today. Minus 100. We really got this one right in a big way. These are new lows, 99.42. Australia is pushing their currency down because it's way overvalued. Even at this level, it's still overvalued by about 7 or 8%. So I think we can see this market move lower. And scope this out just a little bit further, you can see the next real support level in this market comes in right around this level right here. Let's just draw a line to show you right here. I would say around about the 98 level. That's going to be a big level for this market to look at, and possibly all the way down to the 95, 94 level right here, which is another level of support. So again, these markets could have rallies, of course, but the trend is your friend, and the trend clearly in this currency is down. We're looking for it to go lower. So I'm Adam Hewison for Market Club. Have a great trading day and check out those currencies, because money is the name of the game. Put the power of the trade triangles on your side. Join Market Club today.